In this video, what's being discussed is what they call a life insurance policy exposure through a specific strategy. Let's take a look at this.
USA's tax documents and found that in just 2023, a large life insurance policy was taken out on Charlie Kirk. As you can see here, GGLF LLC paid for a split dollar life insurance policy for the president/CEO of Turning Point USA, aka Charlie Kirk. Annual premiums for this policy are massive, $350,000 per year, meaning that the death benefit for someone who is 31 years old and a non-smoker would be between $20 and $50 million. All of this information is public because TPUSA is a registered 501c3 nonprofit, so you can go ahead and look up this information for yourself. GGLF 2023 LLC is also owned by Charlie Kirk, so why would he have one business paying one of his other businesses for his own life insurance policy? Because it's a common tax strategy for high net worth individuals that comes with massive write-offs and deductions, making sure that the beneficiary would not have to pay a massive estate tax of up to 40%, meaning on a $10 million death benefit policy, that could trigger a $4 million tax bill. Remember, in this case, the payout is supposed to be a lot bigger than that. The timing of taking out such a large policy so close to the date he was executed is interesting, considering this was far past the time that he had nationally broken out and become a huge public figure with TPUSA. It could, of course, be because he got married and had 2 children and wanted to make sure that they were protected in case anything happened. But that's making an assumption that we know who received this money. Even though this tax information is public, how much the policy paid out and who the beneficiary is private. Now, one would assume it's Erica Kirk, but if it was somebody else, that would be quite interesting.
So let me be very clear here what the responsibility of Charlie Kirk actually did. It's called a split dollar life insurance strategy. This is not new. This is not illegal. And this is not your traditional retail financial insurance strategy. Split dollar is an advanced insurance and advanced tax planning tool used by founders, used by CEOs, used by nonprofits, and used by high-income professionals. And so what it actually is, the simple version, is that a split dollar strategy is when 2 parties share the cost and benefits of a life insurance policy. Now, usually it's between an organization and a key leader, in this case, Charlie, or a business entity and its owner. And this is not insurance for death. This is about protection, control, retention, succession, and obviously liquidity. So if a founder or an executive is the engine behind the brand, the engine behind the company, and the risk is you insure the asset, which is the person, the brand. Same reason corporations insure CEOs. And it's the same reason sports teams insure athletes, why record labels insure their artists, or why high performers get high-level planning. Now, let me address the elephant, okay? Because now all the life insurance pundits out there, all the buy term and invest the difference only crowd is out there. You've heard it. Cash value is trash value, because that's what this life insurance policy is. It's into a permanent cash value type of policy. That permanent insurance is a ripoff. Again, let me be clear. That philosophy of you just saying buy term, invest the difference is everything automatically disqualifies you from strategies like this, because term only thinking lives at the basic fundamental 101 retail level. Split dollar, that type of insurance planning, lives at the institutional or high net worth level. Now, these strategies are specifically used for estate planning, is used for executive compensation, creditor protection, accumulation, succession planning, liquidity without liquidation. So you don't use this to beat the market. You use this split dollar strategy to control risk, timing, taxes. And see, scripture says, the prudent see danger and take refuge. See, this is not speculation. This is great expression of financial stewardship. But this here is not this conspiracy theory that Erica Kirk or Turning Point USA got rich off of Charlie's death. No, this is what responsible individuals do. Matter of fact, guys like Jim Harbaugh of the University of Michigan, when he was a head coach over there, had a split dollar strategy. You'll see that this is not a uncommon strategy, especially for those that have income levels or high net worth type of situations. This is an insurance strategy, not some form of conspiracy hype for a Turning Point USA or Eric Kirk get a lot of life insurance money. If you like that clip, watch the next one over here. To watch the full length episode, click over here.